Now, this is the last video we're going to do in this kind of run of training videos on the accounts. We started off showing you how to do setup. Then in the second video, we showed you how to do transactions. In the third video, we showed you how to do reconciliations, and we showed you a few tips on how to use reports. The last video is going to be on budgeting or forecasting. So when you come in here, you're going to have a blank screen, and like all of our screens, if you want to do something, you go new in the bottom left. So let's say that I'm doing this in September 2009. So let's assume I want to do a budget for September. Logically, if you're doing a brand new budget, you'd expect to be budgeting for the next 12 months. So let's say we're doing September 09 to August 2010. So you can call your budget whatever you want. You can have multiple budgets. You don't have to have just one budget. You could do a budget with one kind of expected market conditions. You could then enter a second budget with a more optimistic or a more pessimistic kind of outview of what you think will happen over the next 12 months. It comes up with this message immediately telling you what to do. So I'll just click OK there. But what it basically told me to do is to populate. If we're doing a budget for the next 12 months, it would make sense to start off with figures for the last 12 months. So if I click on populate and say yes, it goes into the accounts for the last 12 months, and it assumes that these will be the default figures for the next 12 months. So you see the way I've instantly got a budget, but a budget based on what happened over the last 12 months. Now obviously that's not going to happen exactly over the next 12 months. Prices fluctuate, costs fluctuate. You may be changing your farming enterprise. You may have made decisions to cut down on fertilizer or change your stocking numbers. There's a lot of things that you might decide to do differently over the coming 12 months. But notice down here on the bottom left, this is my starting balance on my current account. If you remember the last video, we did the bank rec, and it was 5,818 was the balance in the current account. Now it obviously makes sense to have your accounts up to date. If you want to do a really good budget for the next 12 months, it makes sense to have your accounts up to date for the last 12 months, because then you have a better picture of what's just recently happened, and it gives you a better starting position on what might go forward. But if you want to come in, if you haven't done any actuals for the last 12 months, you can still come in here and do a budget, and it will work fine. But obviously the more information you have on what's happened in the last 12 months, the better the budget you can do going forward. Now, we've actually, you know, in our example video, we actually did only transactions for the month of January. So see the way I only have figures in for the month of January, because I haven't done my accounts for February, March, April. There's no projected budget for February, March, and April of 2010. But what you do is you then decide to tweak the figures. So remember this contractor check for €333 that we had to put in the last time. So if I double click on my contractor line, it brings up a new screen. It's basically saying, okay, what do you think you will pay to contractors over the next 12 months? So we paid 333 last January, but let's assume that we don't expect that to come this January. And let's say that you might say, well, I need to pay €1,000 off this November. So that's November 2009, and then let's say that, you know, I'm going to cut silage next year in May or June, so I better plan to spend 4,000 then. And so you're basically putting in the transactions that you think will happen between September 2009 and August 2010. And this is where you obviously have to, you know, make a judgment call as to when you think you're going to have to part with this money to various contractors. And when you're finished, you just go finish. And what is actually happening then, you see the way the thing recalculates. So I have figures now in for the budget for June of 2010, and this has changed my figures down on the bottom line. If you look on the left hand side, net cash position, if we're starting off with 5,818, and as we have incomes and expenses, it's going to change the cash that's going to be in the bank at the end of each month. So if you look along this bottom line here, this is your cash flow. Where is my bank based on my projected incomes and my projected expenses for the next 12 months? Where will my bank, my current account, be? Do I need to get extra bridging loans? Do I need to worry about where the bank is going to be? Is there problems in that area? And really, you know, if I go back in, let's do one on bull sales. So if I double click on one of my incomes, and I just say, look, I got 1600 last January, but I've got um, I've got 4 bull calves out there that are pedigree, and I might sell those in March of next year, just before the breeding season. So I would, let's say that you project to get €6,000 from the sale of the 4 bull pedigree bulls. So you put that in and you go finish. And obviously that has the impact of immediately improving your cash position at the end of each month after that, after March. So you need to spend a bit of time tweaking, and obviously, if you go through all your incomes, try and break down when you're going to make money for the next 12 months, then go through all of your expenses, try and have a good guess as to when you're going to have to pay money next year, and just keep building that picture up. You can come back in and modify it. You don't have to do it all in one setting, and when you're finished, you just exit out up in the top right. So that's the way you build up a budget. If you want to go back into the budget the next time around, just come in here and just go double click, and it'll bring you back into the budget that you created the last time you were in this section. And you can then continue to tweak. You might come into the milk recording in Parlour and you might tweak more figures in here. You might say, well, it's going to be another €500. You could come in here based on new information. You can change the budget any time. So again, that's how you do the budget. It's fairly straightforward. Budgets make an awful lot of sense, especially with the last year or two where things are going up and going down very quickly. So it gives you some sort of feeling as to where you're going to be over the next 12 months. So I'm just going to close out of that and try the budget yourself. It's very straightforward. It's not too bad. It obviously makes a lot of sense if you have actuals put in there, but you can do a budget without actuals as well. So we'll leave that video there, and we will hopefully the series of videos has given you some sort of an overview on how to get into accounts and how to make progress with the accounts. The one thing we would always say to farmers is accounts are not as bad as you think. People have a certain phobia about financial record keeping and farm accounts, and they're not as bad as that. They're hugely beneficial. Again, it's all down to time availability as well. There's so much going on in farms and families and everything. It's hard to make time to do everything, but if you can get started on the accounts, do your first month, do your bank reconciliation, and that'll give you confidence to do all the other months thereafter. And you do gain a lot of insight as to how the farm is going yourself. And again, we'd always stress the point is that put this time in just to get benefits for your own knowledge. It'll help you manage your own farm. In terms of giving data to other people like accountants and Chaggers advisors, that's a huge plus as well. But the number one benefit is actually for you to get an understanding of how incomes and expenses are working on your farm. The budgeting obviously help with that as well. So we leave it there for the moment.